Welcome to Elevate the Game, where DFW's top leaders drop gems on success, strategy, and legacy with your hosts, George Abreu and Eric Badiwala. Let's get into it.
Hey everyone, my name is Eric Badiwala, and I want to welcome you to our podcast and our Elevate the Game podcast, to be specific. And we're excited to be here. We're going to be interviewing different folks on a weekly basis. And today we're excited to have our guest, Roman Strilchuk. He has extensive experience in corporate finance and risk management, and recently took a new position at Citibank. He's actually an investor with us currently. He's a new investor of ours currently, and we'll dive into that deal and other deals today on the podcast. But overall, we want to share how Roman deals with his corporate position, the demands of that position, the time that it involves, and then how he manages to invest passively in real estate and look at other opportunities. Right, I think every person that either has a corporate job or even an entrepreneur is looking for other streams of income. And, we want to interview people that are doing exactly that, to provide our audience with ways in which they can do it, right? The best way of doing it is, experience share, right? And then, either following that person, not reinventing the wheel, or copying them exactly and doing what they're doing. Right, Roman? So, Roman, welcome. Thanks for being here, man.
Hey, hi, Eric. Yeah, and thanks for having me and inviting me. Looking forward to this exciting conversation.
Yeah, absolutely. So, we'll just keep it casual. This is always just a kind of a conversational type, podcast. And, we want to get the audience to know a little bit about you, and then we'll talk a little bit more about real estate investing. So, so I just mentioned in the beginning that you recently took a new position at Citibank. Why don't we just talk about, what you're doing at Citibank, what were you doing before, and just your role in general? Like, what is it you do?
Yeah, no, absolutely. And if you may, I'm probably going to step back a little bit to give a little bit more color about my background, because I think it's going to allow our viewers to a little bit better understand the context. So I'm actually currently obviously in the U.S., and I'm like first generation immigrant, but I was born in Eastern Europe, in Latvia. Ethnically, I'm Russian. My dad and my mom is from Ukraine and Russia, and I actually throughout my career and my life so far been able to spend some time in living in different parts of the world, including Moscow, Russia, Latvia, UK, US, Hong Kong, etc. And most of my career was, as you already mentioned, in the finance services area, mainly with the Citigroup. Now, the recent position that you mentioned is on the list of various roles which I did in that sphere. And why I'm mentioning that is because while I'm was really excited to take this new role, because it was like a natural transition from what I've been doing up until recently. That's just one of the of the roles which I've taken, and was doing jobs in this area with Citigroup. So in terms of that, I would say overall I've been doing a lot of different jobs at Citi, again in different geographies, mainly starting from looking into the corporate credit and supporting that part of the business within institutional clients. That's where my career started back in 2006, if I'm not mistaken, at Moscow, where I was looking after top tier corporate portfolio of various companies across different industries, including financial services, oil and gas, mining, FMCG, etc., in Russia, Kazakhstan, Ukraine. And then, I naturally transitioned into, new roles when the opportunities came in. I traveled the world a little bit, did some market risk management in Hong Kong, understanding how the market business does in terms of equities, fixed income instruments, etc. Spent some time in the UK looking into the operational risk aspects of doing business. And I know my notes sound like super exciting, but at the scale of the Citigroup, being multi-country corporation with a huge presence, diversity of various businesses and products that we offer to our clients globally. That's actually was a very, very interesting area to look at. And then ended up in the U.S. Picking up some new knowledge around the private bank business that we do here. This is in the banking sphere, the name for essentially providing the financing to all high net worth and ultra high net worth individuals. For the last 8 years, I've been doing the global country risk management. That's pretty much assessing the macroeconomics, political situation, geopolitics globally, covering the entire globe, but with precise focus on the countries where Citigroup does its business, right? Whether we either had a presence with our legal entities and banking licenses, or where we actually have clients which we service, either in the lending space or in the market business space. And my current job is really focused on managing the comprehensive reviews and assessment of our international global business in all these geographical locations. So pretty much, at a country level basis, we're assessing the strategy, the opportunities, the risks. We're setting up the risk appetite there, et cetera, et cetera. So this is what it's about. I think it's pretty exciting, and I do have a small team which allows me to manage the entire globe of our businesses. I would stop here because I don't really want to go into details,
for sure.
and really overwhelm your viewers with that information.
Yeah, I think that was a great intro. Obviously, like Citigroup is huge. Funny story. I used to work for Citicorp Investment Services when I was back in college. I don't even know if that's if they do that now or if that's like a branch, but Citigroup is huge. And obviously a global and international company. So, I mean, it's would love to sit down and learn more about the business, but definitely, want to try to keep it a little bit more real estate focused. But, it's clear that, obviously you manage people at Citigroup, and, it's probably a high demanding job, right? I mean, it takes a lot of your time. I mean, I'm imagining you're working at least 40 hours a week, right?
No, absolutely. And it's funny that you mentioned that. It's what I really can share about my experience working for Citi, and mostly in my current and prior job doing the country risk management, is that it's really I wouldn't say I'm working around the clock, but given the natural difference in the time zones of all the geographies which we have to manage and work with, pretty much all my stakeholders are located across the globe from east to west around the globe, and that's really has some time availability, put some time availability demands on me. My day really can start at 6, sometimes at 5 something, your central time, and when I do some catch-up calls with colleagues and stakeholders in Asia and APAC, that might be ending up at around 8, 9 p.m. and even later. So this is really probably the most impactful thing which I have I would say it's tall, because you said how I've been able to manage my time. That was one of your kind of intro questions. I think that what I really kind of mastered and become really proficient at, because the more proficient you're at in managing your time and focusing on really important things and making sure those things get done efficiently, the more you can stick into your 24 hours, and that would allow and provide you with an opportunity to do more things, more exciting things that you're interested in on top of that, because this is like a starting point.
Oh, absolutely. Yeah. I mean, with all those meetings, I mean, managing your time is definitely like super important, right? I'm sure you live and die by your calendar. Um, but I guess with that, we can kind of, transition into, your time is very important, right? You need to be able to manage that, and I know a lot of people that either have a corporate job or, even they may be living the entrepreneur life, but they may be a restaurant owner, right? Most people want to get into real estate. Real estate is the business has created more millionaires and billionaires than any other, profession, statistically. So, what does that look like for you? Obviously, you have passively invested in deals. Let's talk about that a little bit. How did you find the time to start passively investing and like, maybe let's talk about kind of the first time you passively invested. How did you what did that look like? Did you just start kind of going on the internet and searching for different operators? What did that look like from a new person trying to manage your corporate job, but also trying to find time at, maybe midnight or whatever, right? If you're taking calls at 5 a.m. and 8 p.m. and 9 p.m., you have dinner after, and then, maybe, digging into, some ways to passively invest. I guess tell us a little bit of a story of how you kind of got started there.
No, no, absolutely. And I would say, probably as many of us, and who at least those who are watching this podcast, at some point in time when I moved over to the U.S., I started more and more kind of researching, the ways of how I can retire from my day job, right? In the sense that not like fully, retire, not doing nothing, but more of, creating this net worth and capital, which, I can deploy it in certain asset classes, and then it could start generating, passive income for me. I would say the time when that really started playing out and I started, getting on track and understanding more and more what other people are doing in that area was probably right before the pandemic hit. And I would say, YouTube was probably that gateway and the window which allowed me to, to start, gathering this information.
It's a good one.
Yeah, exactly. I think overall, I would say, is ease of getting the information currently in our, modern age of technology and information progress. It's probably one of the greatest kind of achievement, which can provide, everyone who's looking for this information a lot of benefits and advantage, versus, our parents, for instance, who didn't have this, opportunity in the past, because I'm always trying to compare like what opportunities other people have, what my parents' opportunity had, and that's always comes to the, to pretty much to the same answer, access to the information and, at the right time. Now, going back to that, so I started exploring these opportunities and, I got into, several, podcasts or I would say, video bloggers, something, what do you do? And I think this is really, really useful and helpful to people who are looking for that information to start off. I found a couple of guys. I think if you know these names, one is meet Kevin. He's one of the investors who was doing real estate. Starting as an agent and then started investing in California. And he had his own channel and started sharing the experience around real estate investing in the U.S. Expounding all the nitty gritties of that. And the other one was I think it was Grant Stephan, if I'm not mistaken. Yeah, that was another guy. He had a little bit different perspective. He was like, more focusing on saving and, more the frugal approach, but similar real estate focus because I think he was doing that as well. Anyways, and that, that was my kind of starting, bloggers who started more of, telling me the picture of how this thing looks like here in the US. And I think the other very important thing, which really kind of motivated me to start doing more research around the real estate, and the point that you mentioned that it's made probably most millionaires around the world, is that not only, I would say, legislative infrastructure and the tax code, which is available here in the US, which provides enormous amount of benefits. And that came to me as a really kind of eye-opening thing, because as I mentioned before, I had an experience living in different countries. And while I was there, I was researching, well, to the extent I was interested in, to see like what are the opportunities there, like what is the legislation, right? And I don't recall any other country having that extent of the benefits that investing or doing real estate as the business would provide, as here in the US. And that really got me excited, because I realized if you were like really interested in doing that, either passively or actively, you can really get a lot of additional gain from saving the capital, saving the dollars, and then reinvesting it. Pretty much multiplying your return. Yeah, exactly. As opposed to just simply doing the investment part itself, which everywhere. So this is what got me excited. I started researching it. Start to think, what are the ways? What do people do? Obviously, the most simple one is start buying some single family properties, which I started doing, by the way, even when I was in Moscow, because I started investing there in the apartment complexes, but on the kind of owning, just single condo apartments in the big complex, right? Not owning the outright the entire complex as you guys do here. But then additionally, start coming to some local meetups. I don't remember exactly. There was like several applications which provide the schedules or heads up for the upcoming local meetup groups, and obviously I started going to those, meeting people, creating the connections, and this is how I figured out and discovered the investing in the apartment complexes as a little bit more kind of scale type of real estate investing, as opposed to single family properties. And that's how I learned who are the real estate investors, general partners who provide these opportunities for the limited partners here in the DFW area in Texas. And if I'm not mistaken, like 2020 or 21, we partnered with some real estate investors like that, and invested in our first apartment complex as the limited partner. Still owning it. It's doing pretty well.
So you've talked about a lot of good stuff. Let's kind of recap there, because that was great.
And sorry, I might be talking a lot about things.
No, that was great. That was great.
Interrupt me, and if you want me to elaborate things.
So the first thing you did was really get educated, right? You went on YouTube. You started following people that were investing in real estate. Maybe some operators and syndicators, right? Started kind of get educated there. Then you started following a couple specific guys that were talking about, I guess, real estate investing and passively investing. And then you realize, wow, the tax benefits, and we're talking about depreciation, are huge here in the US, right? And they are huge. You can get, and now in the US, it's actually 100% bonus depreciation is back, right? And that's great. I know personally, we haven't paid, myself and my partner, George, we haven't paid taxes in a few years, which is great. And a lot of them our investors do the same because of all the, the tax benefits. And then lastly, you were talking about how after you kind of looked into this, you started digging into, local meetups and, connecting with different, people in the business, whether they're, active or passively. And then you ended up investing with somebody, I guess, that you met at this meetup, right?
That's correct.
And which is really how it happens, right? You just need to go out there and kind of get started. Number one, get educated and get started, go to networking meetings and start connecting with people. Obviously, like and feel, and if there's a warm and fuzzy feeling there where you trust them, then at some point you end up investing, right? And then you ended up investing in some large apartment complexes after kind of dabbling into single family, which is what most people do. So, that was awesome. We kind of did the same thing, right? We we got started in the single family space, buying and selling, flipping houses. We were also doing wholesaling, but then we found out about, these large syndications where you can buy, apartment buildings. And, I never thought I could own a, $50 million apartment building. Those thoughts don't even cross your mind until somebody educates you on it. So, man, that was really, interesting stuff. So, I guess transitioning from there, you invested in a deal in, I think, 2021, large apartment complex, or maybe a couple deals, and you're still holding on to those deals, right? You guys still own those deals?
Yes, we still haven't exited. Yes.
Yeah, and I'm assuming, the market isn't great right now. I think a lot of people are still waiting for the market to turn. Everyone has said survive to 2025 and then thrive in 2026. So what are those deals looking like? Are they, are those operators thinking about potentially refinancing or selling maybe in 2026, or what's the outlook of some of those deals right now? Just in
Yeah, that's a
general.
good question. I mean, probably, my answer would not be, super satisfying because I could have done better
Yeah,
on really, keeping my, arms and fingers on a pulse and following up with them. But given I'm more in passive investor role,
yeah,
I don't like really probably always have information like really out to date on like what is the strategic intent for this property for the near term. Obviously, we have this catch up calls. They
yeah,
provide the operational update, financials, etc. What things are doing on the how things are looking on the ground. But there's no indication for now as far as it goes to details and what they want to do next year with the property. It seems that it's kind of comes to the basic because as you rightly pointed out, and me doing this on the more macro level, there's different kind of variables which real estate business and investing depends on, right?
yeah,
It's market condition, rents, pretty much how the economy does, because that also has a direct impact on the people's income, and their mobility, et cetera, et cetera. Then rates, another one, right? So financing is another big one, and all these things are evolving. Nothing is static.
yeah,
And as we all know, currently we're kind of on the verge of hopefully going into the rates reduction cycle, but I wouldn't be that sure because even the macro events or industry events and cycle, they never go in circles. People think they do, but they actually go in spiral. So it's all
yeah,
every other kind of turn, it's on the different elevation, I would say, or different parallel. So it's never the same. Now, why I'm saying that is because now it's not super clear of how the next cycle going to look like. Because
sure,
if you agree with me or not, I don't know that, but it seems that the current modern world, even at the macro level of the economy, even in the U.S., which for many years was kind of this exemplary standard of stable, developed market economy, super high rating of the sovereign debt, it's no longer there, and there's so many new kind of new factors which add to the volatility
yeah,
of everything, including around managing the rates. So quick answer to your question. I'm not sure if there are plans to refinance next year, because it really depends on where the rate's going to go. It's hopefully, there's a high probability they're going to, really start going down, but at what pace, not clear. If there are going to be any other tail events, we call it in the industry, or big market events, which, going to have an impact on inflation and slow down that,
yeah,
cutting rates environment. No one knows that,
yeah,
even the top macro analysts. So this is really kind of variables which impact that. But I would say, from my perspective, the limited partner, And luckily I'm in that position that allows me to do that. I'm not really worried about that. So as long as the operators or general partners who does this job on the ground do the right job on managing this business, making sure the risks are timely and rightly mitigated, all the operational stuff is done properly, and there is no like big drop ball drops along the way. There is always an options of how you can manage through crisis or downward scenario, etc. And exit is not my kind of key concern, because I have other sources of income, as you said. I'm building and actively focusing on building other passive inactive sources of income. So I'm hoping that all the projections and financial estimates that we were discussing with the general partners are still going to be met and hit, or at least they're not going to be like super substandard to what I was initially expecting to as an investor. But that's not like really my big concern. And whatever the market allows as the next step, we obviously the general partner is going to be doing that. I would say, as a limited partner, I also don't have much of control of that, anyways, and only can ask questions. But what I would say that when I'm participating in any other new deal like that as a limited partner, I'm actually becoming a little bit more and more experienced already, because I'm already keying in all that prior experience which I had with other general partners, and I'm probably becoming more conservative in terms of my own expectations of what could happen, and whether those 5-7 year timelines, which usually are the norm for the investing in the apartment complex here in Texas or in the US.
I think you said a lot of great stuff there, Roman. I mean, and it's a very real take, right? Like, number one, experience trumps everything, right? The more deals that you invest in as a passive investor, the more you're going to learn, right? And when you deal with different operators, you're going to be able to see how they work, et cetera. But it's very real, right? The market is not great. The economy is not strong. I think it's working on rebuilding. A lot of operators still don't know what the outlook looks like, and they're hoping that things improve so that cap rates can come down, interest rates can come down, and then more refinances and more sales can happen. But I think you really nailed it. Is that the most important thing to know is that like everything is based on projections, right? When you invest in a deal passively, it's normally like a 3 to 5 year term, right? It is what most people are projecting. But some passive investors don't realize that there are market conditions that can change those projections, right? And as long as you have faith in the operator that they can manage through those downturns and that they can adjust and basically become resourceful and figure out ways to resolve and basically weather the storm until it gets better so you can be able to sell is very important. I think nowadays, a lot of people, you may be hitting the 5 year mark now, and an investor may say, well, why isn't the deal selling? Well, are you in tune with the market, right? Right now, it's not the time to sell. If you were to sell, it wouldn't be the most opportune time, or you're not going to hit the projections that you were doing, So I think what you said there is very real. And, you're a little bit more in tune than maybe some other passive investors that are truly passive and they don't even watch the market, right? They just put their money in and they kind of set it and forget it. But, obviously you being in, having a corporate finance background and risk management, you're a little bit more in tune, with the market and what's going on. So, I mean, I couldn't agree with you more, man. And like, figuring out now, and so now as you transition, so like, what is the next, like, let's say year look like? Are you looking to, or 6 to 12 months, are you looking to invest in other deals? Or are you kind of waiting for the market to kind of improve before you invest in deals and just kind of waiting to see how your current deals work out? What's kind of your strategy there?
Oh, absolutely. And you probably already know the answer because we've spoken a little bit about that offline with you before. I would say, my goals for the real estate investing is to really grow this asset class in my portfolio, right?
Yeah.
So I mean, I'm not going to be stealing time of this podcast to talk about other things which I do, and hopefully you can invite me again, to speak about that. But the point is that I really want to grow this real estate, piece in my portfolio. That's one, and I don't believe it's currently at the level I want it to be. I would say it's probably, below 5%, and I wanted to grow it to at least, 20% of my overall net worth and investment portfolio. Now, what it means for me, it means that I either, can continue passively invest on these deals, or I can also try to find and allocate a lot more of my time, which I don't have, given all the ventures I'm looking at and day job, and do it actively. Now, if you asked me this question, 1 year ago, 2 years back, I probably would say, just growing, that portfolio passively, is an easy, decision.
Yeah.
Now I'm not sure, because, the longer I kind of look into things myself, I start more and more valuing my time. And I really would like to get the best returns, on the time I'm spending on something.
Yeah.
Which means that, and as we discussed before, this maximization of all the benefits that investing in real estate investing provides in the U.S., it really comes from the active investing. But it has this toll of, you actually having, first of all, skills and expertise and the time to do that. Now, given that, I'm kind of balancing. So, given I also exploring other, ventures and other opportunities where I have to allocate certain, of my portion of my time for active, management of something, whether it's a business or active investing. I'm still, not sure if that's going to, be taken by the real estate investing or something else, because I'm also exploring some other opportunities as well, which are not, related to real estate investing. So the answer would be whether, I'm going to become, a general partner on some of the future deals with with the other active real estate investors here in DFW, as you guys are, or someone else. And I will obviously have to dedicate a certain portion of my time, whether that happens or whether I will just continue buying, new deals, joining, partner with you guys and others, like you on the, as a limited partner. That's pretty much going to be my, next steps. And, obviously, as I'm getting more and more experience, seeing, and going through the full cycle of these transactions, I will be more and more kind of picky on, with whom to work with, right? Because I would really, this would really build kind of the trust and the reputation of those partners, really proven, based upon, actual results and, going through the cycles and everything, which will, give me that comfort. Because really, and probably that's not what, you want me to tell to your listeners, because, different people have different expectations for the returns when it comes to the investing. Sure. And unfortunately, not in favor of real estate. Other things which I do in investing provides very, very high returns for me, with very little overhead and time invested from my end. So it's if you can get it, it's really difficult for me emotionally, despite how excited I am about the real estate, and I believe that it's still really great, a fundamental way of creating the wealth. It's still difficult for me, to dedicate a lot of time there, or deploy substantial amount of my capital in there if I know that I can make returns, much higher returns, faster, and in a much shorter time period. So but that doesn't mean that I'm not, considering that. I still going to be continuing, investing in real estate. I still think I want, to partner with someone, and actively manage,
Mm,
one transaction or two, and then see obviously if that is something that would create a lot of kind of burden on me from the time perspective, or whether that's still going to be manageable, because obviously I want to add value as part of that venture, not just be kind of a nominal partner there.
yeah.
And I know that's a lot of work. So I actually, give you guys a lot of respect, because I think, it requires a lot of dedication, a lot of discipline, a
Yeah.
lot of knowledge and experience. And that's not an easy game. Let's put it that way.
Yeah.
All the results that you guys are, providing for your passive investors, this is really, really, hard work, and not everyone can do that. As I said, I've seen other folks who've been doing that in DFW in Texas, and not all of them, and I would say not even the majority are successful. I think there's
Yeah.
only a small group of people who really uh, could make it going through that journey, and not to kind of drop the
Yeah.
ball along the way.
Is definitely, real estate investing is definitely not an easy game. People watch it on TV and they see others do it, and they think, oh, well, I could do that, right? But it does take dedication, it does take hard work, just like anything. And you really have to master your craft. You have to have a good team around you, especially if you're going to be an operator, right? So, we've been doing it for, 20 years now, just the real estate business in general, but really buying apartments for the last 7 years. And we've learned a lot in those last 7 years, but so yeah, it does take, a certain type of individual, and you got to have thick skin, and you have to be able to know how to deal with problems, and figure out resolutions quickly, and solutions quickly. So, but I think you really summed it up, really good there, Roman. I mean, look, diversification is what everybody wants to do, right? You're in your corporate job. It sounds like you have some active investments that you're doing and you want to continue to do, but you also want to continue to grow your passive, side. So, I think that the main takeaway that I hear from you is, don't put all your eggs in one basket. Do as much as, you're willing to do where you're comfortable, and diversify, right? And work with people that are experienced operators if you're going to passively invest, and that you can trust, and that you see that there's a path forward there, and I think that's great advice, to anyone listening, is that yeah, it isn't easy work, right? But it's important to continue to doing what you're doing. Also look at ways to grow your passive investing, in whatever industry it is, and then do some active stuff, right? I mean, that's how kind of we got started. We got started, doing passive investing, and then from there, it started growing into active investing, and then now we've been bringing on passive investors, to participate with us, right? And then, figuring out how to get through the challenging times, when the market is down, and then celebrating when the market is up, right? When you're selling, and doing all that. So it's definitely a wave of emotions, and it's definitely a spiral, like you said, 100%. So anyway, I think this was great, Roman. I think you really talked about some really good stuff today that, can help people that are just looking to get started, or they don't know where to start. We talked about how you started your journey, started getting educated on YouTube, and then going to networking meetings, and getting introduced with people, and then investing into your first deal. So I think all that stuff was super helpful. So really appreciate sharing kind of your tips and your experiences with us, and how you got started. I think that's the best way for others to get started, is just to experience, and share their experiences. For me, I know when I got started, I just wanted to know what other people were doing, and I was just trying to copy that, right? And like, all right, I don't want to reinvent the wheel. What did you do? How'd you do it? And tell me exactly how you did it, and let me follow you. And maybe how can I help you get there, and how can I help you accomplish your goals? So anyway, thanks for sharing today, Roman. Really appreciate the time. If somebody wants to connect with you, what's the best way to connect with you? Is it, email, pick up the phone and call you? What's the best way to connect with you?
Yeah. Well, first of all, thank you so much for having me, inviting me to this podcast, and congratulations with starting this up. I think it's really really helpful, and that's exactly what helped me to start off in real estate investing. So
Yeah,
I wish you all the luck in that space, and on top of what you're already doing.
appreciate
Um,
it.
Also, it seems that we just barely scratched the surface. I don't know if you had that feeling, but just being
Oh,
cognizant of time,
100%.
it seems that we just really ran over things, and I would love to spend more time with you talking about specific things in more detail. That's okay. So looking forward to
Yeah,
new invitations. But
I
in
think that would
terms
be
of
great. A further deep dive, right? And, a follow up to this podcast. And, we get into, just more of a deep dive. I think that'd be great. And, I welcome that. So we'll make sure we pencil it in.
Yeah, no, that's great, and I appreciate that. But in terms of contacting me, you have my email, I guess, to people if they want, to contact me, and
Yeah.
to have I don't know, a little
For
bit
sure,
more.
yeah, and we can share that with them, and we can share that with folks if they want to connect with you. And sometimes people may want to just reach out and say, "Hey, how'd you get started? Really enjoyed the conversation you had on the Elevate the Game podcast, and tell me more about how you got started." Right? I think that's the reason we're doing this, right? Is just to get the word out. Just like you said, this is how you got started, listening to podcasts and stuff like that, right? And the things that we talk about can help somebody else get started or get to the next level in which they're trying to do and whatever it is they're trying to do, whether it be real estate investing, just education in general, and then or maybe just growing, right? Self help, self education. That's really the most important part, and that's the reason why we have this podcast. So anyway, thanks for being a part of it, Roman, and you know, and sharing with us today and helping, other people elevate their game. So thanks, man. And
No, absolutely. I hope
we'll
I helped to elevate the game.
yeah, absolutely. That's what it's all about, man. We want to be talking with players that are kind of, have done it and, can help others elevate their game. So anyway, we'll stick on for a couple more minutes and just chat, offline, but really appreciate the time here, Roman, and we'll see you guys next time.
Yeah, appreciate it.
Thanks for listening to Elevate the Game. If you're a mover and shaker in DFW with game to share, apply to be a guest at elevatethegamepodcast.com/guest.